I'm kind of pitching myself here as somebody who's an experienced investor, but always, I'm definitely new to this business as well. I just want to speak about this product and just how much, it has really helped me, propel myself, get better with talking with sellers, actually be able to close a deal. My strategies right now have been primarily direct mail, cold calling, and cold texting. And I've found a lot of success with Real Estate IQ, especially being able to get in front of customers, have engaging conversations. And of course, I'm hoping to use all of that to build my own business and eventually retire off.
Excited to be here, and I want to say a big thank you to Real Estate IQ. They have the absolute top leads in the industry and just make investing effortless for all of us as real estate investors here in Texas and obviously everywhere else that they're focused. And I'm proud to be associated with Real Estate IQ. Love what you guys do and love how you all help investors so that we can focus on the thing that makes us the most money, which is the job of real estate investing.
I wanted to jump on this morning and give a shout out to Real Estate IQ. I began my journey with them a few years ago, just using some of the more basic products, the off-market leads. And since then, growing and visiting and talking with not only Steve, but other people who are involved with Real Estate IQ, I've had the opportunity to actually not only be a client, but I also became an investor with them. And that is one of the beauties of being able to be part of Real Estate IQ, is it gives you the opportunity to grow as an investor, especially in real estate.
Hello, everybody. I realized I was not added on stage. Can everyone hear me now? And thank you for your feedback. Um, Please give me some, like a thumb up or something, and let me know if you can hear me now. Is this, can everyone hear me? Can everyone hear the sound? Okay. Thank you. Thank you for Nancy and RD. So it looks like I was not added to the stage, and that's what happened. Well, guess what? We can skip the intro, and we will dive into the content, right? Like we already spent the past 10 minutes kind of talking about um, the importance of having a consistent pipeline that feeds into your marketing, so that we can consistently have quality conversations with distressed sellers. That's kind of what I was trying to express. I know everyone cannot hear me. And then a couple of other additional things that were important, I thought when we were starting out, is number one is having the education, access to education, which is something that we offer here at Real Estate IQ, with this event and also weekly classes. And then we also have a community with mentors and coaches who actually have, we're very closely connected to a coaching program as well, to really offer you the support that you need when it comes to the deals. So I apologize for any sound ecosystem here. We're dealing with a little bit of technical difficulties, but we have a really good content prepared for you today. So, I assure you it'll be worth it. Okay, so disclaimer. Here we are talking about educational purposes only, and we don't offer investment, financial, or legal advice. I got some feedback on echo, so if you can still hear echo, let me know. It may not be something that we can fix now. It might be the space I'm in. I'm in a co-working space. All right, so if you have deals that you're working on, you got a lead, and you don't know how to structure a deal or negotiate with a seller, you can send it to me, and either I'll personally help you, or someone from our coaching team is gonna help you, walk you through step by step on how to work with the lead and figure out the deal. All right, let's help you put some deals under contract. Right, that's always very exciting. Okay, so today's agenda, we struggle a little bit through our intro, and we have gone through that, and then we're gonna talk about some important market updates that affect your investment outlook, and then maybe there's some adjustments that you need to make, and then we prepare some case studies for you along with a feature topic, which is about the financial market and how the mortgage rate is gonna go, and then we'll end with sharing some upcoming events. For example, tomorrow we have some really cool events that are coming up, and so really want to encourage you to join us, especially the office hours and the open house. Okay, so a couple of market updates. Right, number one, the mortgage rate has risen quite a bit last week, and this is kind of based on the combining with the news that Fed has held their benchmark rate between 3.5 and 3.75. So what does that mean for investors? Well, we're talking about around 6% type of mortgage rate is gonna be pretty much the new norm now, which is lower than before. And if you are working with distressed sellers on loan modification, you'll probably see, this is kind of the interest rate range that they'll be offered by the lenders. Okay, the Texas Real Estate Research Center, right, has now released the 2026 economic outlook. And because of the elevated mortgage rates, right, and we're talking about kind of continual moderation in terms of residential real estate activity. Now, that said, the mortgage rate has already dropped quite a bit since late of 2025. And, we were sharing also the trend that there is refinance and financing activity were much higher, in the first 3 months than last year. Okay, Greater Houston market is now more balanced with higher inventory. Anecdotally, I'm also seeing we're actually currently working with quite a few Houston sellers, distressed sellers, that some of them wanted to put on the market, and it's just sitting on the market. It's not moving at the price that they're trying to sell. And then we're also seeing more opportunities in the Houston market. So maybe Houston is giving us some interesting results coming up. Ed is saying that 6.5, 6.75 on investment property is still great rates. Yeah, I agree. All right, so in terms of deals update, I want to show you one of the deals that we've been working on and underwriting this past week, and then some additional items too. So this is a deal in Houston. It's a 4x2, about 2,300 square feet. And it's a May foreclosure. And this is kind of the kicker. Let me share the next piece here. Is that if you look at the mortgage balance, the rate is pretty good, right? 5.875. It's under the current interest rate today. And but the reinstatement has accumulated to 75,000. And this is due to a split, a divorce situation, and the mortgage wasn't being paid. So now we're kind of looking at the mortgage balance and the reinstatement that's much higher than how much the house is going for in that area. So this house is kind of underwater. So there are a couple of outcomes that you can potentially get with this, right? For this seller, let it go into foreclosure. That's one. Number two is to do a short sale, and then number three would be look at a loan modification and a wrap situation. So our next step now is our suggestion is for him to work with the lender, and he has done that. And a couple of things that we can do to kind of tweak the, see how if the numbers can be structured to make it work. One is to see if there's a 40-year mortgage, and also explore opportunity for lowering the interest rate to get the monthly payment to be about $1,600. If that's the case, then from a monthly standpoint, right? If we do a wrap, a new buyer is going to expect to pay no more than the current rental area, and so about $500 per month of spread is what we're looking for in a wrap transaction. So if we can structure on that, and maybe some of the, obviously number one is the reinstatement needs to fold directly into the mortgage balance, so that we don't need to come up with $75K to keep the mortgage current. And even though it's going to be operating in negative equity in the beginning, this particular deal can still work if the cash flow works out. Okay. If you have further questions on this, we can do a deeper dive during our office hours. Okay, so just kind of want to showcase how we can work on the deal and kind of make a deal that looks like it doesn't work, with the huge amount of reinstatement. It's very hard for any seller to stomach into something that could be workable. And then another thing that I wanted to share, it'll come back to me. I lost track of that train of thought. Okay, a couple of feature deals. For these deals, right, where disclaimer is always do your due diligence. Don't trust these numbers. Run your own numbers. Okay, so in Waco, we added the zip code here. This is a sub 2 property. It's a condo, and there is a basically a combination of owner finance and the mortgage, and basically it's kind of taking over the financing, which is the attraction of this particular deal, and you can probably structure a wrap on this one as well. And this is a 5-year wrap. So a little bit of challenge there, but there is a good amount of monthly payment arbitrage that you can make because the PI is still quite low. All right, this is a fantastic deal. Kind of internally, we're talking about, if we have an investor interested, we will sell it, and after a particular time, after a certain time, maybe we'll end up keeping it too. So here the property is worth about a little bit above 300,000. Okay, so the entry is 10% of that, with the earnest money 5,000. And what's really cool is that the mortgage, you can take it over sub 2. The total amount owed is 148, and then I actually personally look at the property, and the rehab amount is not going to be too high, and so you can purchase it sub 2, put a little bit of work into it. The house is solid. The house is very solid. There's some AC work that needs to be done. We're getting quotes right now, and this is quite a bit of profit to be made for a flipper. And then this one, we just got under contract this week. It's in Huntsville. So we're estimating ARV about 102. The comps are a little bit harder to find. So you might, we always suggest that you do your own due diligence. But again, we left enough margin here for a flipper. So if you're buying in this area, this could be a good opportunity to look further into at least. And is asking 165K for a condo. Yeah. All right. We have more deals that we showcase as well. There's some fix and flip deals. There are some buy and hold deals and land deals too. So if you're interested, you can scan this QR code and fill out the form, and then we'll have a further conversation. There's probably more information that you want to learn more about on the deals. And if you want to arrange a showing on the property, we can arrange that too. Okay. And then another thing, we talk about the community support, and so we also have launched this program, and right now it's a waitlist type of status. Okay, so a deal accelerator program, right? Really to address what do we need to accelerate our real estate investment business. So talking about deal finding, deal analysis, right, and how to make the deal. How do we negotiate and structure an offer and present the offer? Along with that, we see the most important thing is the motivate seller, right? The distressed seller leads that can give us consistent number of leads to work on and practice our skill set. And then we also have the deals program, which is bringing you the deals that if you are interested in kind of operate on the deals, we can give you the deals directly as well. Okay, already got traction. So if you're interested, scan that QR code. Next, we have our kind of keynote topic, going to talk about the finance market and the current mortgage rate. And I'm going to invite our speaker up here, Mr. John Huang. John Huang is a really good friend of mine. We've been working together for several years now. Always love his strategic thinking and his strategic thinking and his knowledge in finance. So really appreciative of John, and I trust him a lot. And without further ado, I want to invite John up here to give us the next talk. Hey, John. Let's add John on stage.
Hey.
Mr. John Huang.
Okay. Now I'm on the stage. Awesome.
I can hear you.
Can
Welcome.
you hear me okay?
Yes, sir.
All right. Thank you. That was exciting. Thank you for the sharing. Hey, you know what? Just so you know, in your background, we keep hearing the champagne pop. I don't know if it's noise or something. It sounds like you're in a party. Everybody's celebrating or something. Is that a real estate events?
I wish. Cool. I wish I have stopped drinking now. But I have stopped drinking. So
you're in a great location for those who don't. That's right. All right, cool. So I'm going to talk a little bit about the real estate investment market scan and updates and some of the information you probably want to be aware. I don't know if you know or not. So bear with me. And I'm going to talk a little bit about, the things that we went through and some of the challenges that related to mortgage. And I want to bring to your attention, and maybe hopefully you can leverage that when you work with the sellers, right? Okay, so before we go further, I do want to introduce a investment triangle, for which is extremely critical. Okay, extremely critical before we do anything, put our money into any investment. The investment triangle looks like this. We care about returns. Okay, we care about a return. We care about the safety of our principal and our investment, and we also care about the cash flow or the liquidity. Okay, it really depends on your personal situation, your income, your job, and your age to retirement. All pretty much, what kind of investment that you should leverage. So, for instance, if you're in the late 20s and early 30s, just got married or still single without a children, you know what? Your cash flow probably is okay. It's not that great. Okay, so you need every dime to be put into use, right? And at this point, you can take some risk, right? Because you got a parent to fall back on or brothers, sisters to fall back on, and you still can find different jobs, right? Very easily. And your return, you want a really good returns. So you really don't care about the much about the safety of your investment money, but you want a great returns and you want a great and maintain a possible and reasonable cash flow. So here on this edge is what your investment should be. What is this? Stock, actually. Stock, Bitcoin, right? And some of the risky investment you should consider. I wouldn't do buy and hold. I probably would do, fix and flip, right? And I probably do some, Airbnb arbitrage. If you knew that term, that's great. If you don't, that's okay. You probably want to do some pre-foreclosure auction work, right? Take some risk. But if you're in the, let's say, 50 to 60, okay, this is where you prepare your retirement. So what is retirement, right? Retirement is about cash flow. However, because you still have a good job, good income, so cash flow is not a big issue for you at this point. So, but you do want to make sure whatever investment that is not going to jeopardize your, retirement, you want a safety, right? and you want to moderate the return as well. So at this case, your investment for 40 and the 50s and the 50s and 60s, you probably want to stay on this edge. Okay, what is this? Well, real estate. What real estate, right? Is we are in the real estate workshop right now, and what is real estate? Probably is a buy and hold, okay? And probably join a deal, join like deal makings and make some money, okay? Join the deals. And what are the opportunities you can consider? Well, you want to save returns and you want to do some annuity based, you know, self-made pension, or you can even consider, because your cash flow is not a problem, you don't care much about a cash flow. So at this point, you probably want to consider some, life insurance, permanent life insurance based investment, for which is to reduce the tax and also to increase, inheritance to your next generation, because they are turning 30, 20, 30, right? They're getting their families established. Probably they only care about their own families and they don't care about you anymore. And in order, I'm not saying you're bribing them to take care of you. No, what I'm saying is you need to create some real estate. I mean, the estate, not just real estate, and so that they have some attachment to you, right? And of course, you want to leave something to your grandchildren as well. So you really want to leverage, a permanent life insurance type of investment as well. And what we call the permanent a financial real estate. Okay, you own your own bank, technically. But that's something we can talk further offline. But by all means, I'm not giving you a investment kind of a recommendation or whatsoever. Oops, sorry. As this, Steve read the disclaimer. We'll just give you some ideas, right? What else? So if you care a lot about the cash flow and the safety, say you are already 60 and above, and you really cannot afford any additional investment money, and you care about the cash flows to pay for the medical bills, nursing home, assisted living, all that. So in that case, you should be on this edge, should be on the bottom edge of the investment. What is this? Well, this is about bond, okay, especially government bond, and you want to care about the safety of your money. So that's something we also use for, by leveraging annuity investment or self-made pension or permanent life insurance, which is interesting. A lot of people don't think about it. Of course, the last thing is about CD, right? So if you really put a lot of money into CD, I would highly suggest you to talk to your financial advisor, not CPA. CPA only does tax return, okay? And you don't need a CPA. They're losing jobs like falling leaves, trust me, all right? And one major company, Block, in a later of my presentation, you're gonna hear about it. They just let go half of their employees. It's a financial banking investment company. They have about 10,000 people. They just fired 4,000 of them as we speak. Why is that? Well, a lot of them were CPAs, CFAs, and those low tier only reported numbers, and they really don't know how to do financial planning. So what I'm saying is actually registered rep or financial advisor with a license like insurance license with a series of 6, 7, 65, 66, and all these licenses, all right? And that's financial advisor. Yeah, it may cost you money, but there are shops that don't charge you anything, like the financial advisory service that we're running as more like a charity, right? We help the needed in our churches and in our neighborhood. We never charge them any consulting fees, and they can always come back more than 1 hour, 2 hours, 10 hours. So if you know someone like that, call them. All right, get some ideas. All right. So CD is definitely not a good idea. Okay, guaranteed not a good idea, because you can get something really extraordinarily with a great return, but lockdown rates for extended period of time versus 4% for 6 months, 5% for 1 year, that sort of thing. Okay. But anyway, I just want to give you this idea. Now we are in real estate. Okay. Real estate can be a fix and flip, can be a buy and hold, can be arbitrage, right? the Airbnb, ABB arbitrage, or midterm or long-term rentals, or just deal participation, like what Steve said. We have a lot of deals in the pipeline. If you join the deals, but essentially we just split the profits, okay? Or you can be a lender too, all right? You can buy a property and become a lender to rent to rent to own or something like that, okay? Or you can go even a little bit more crazy and aggressive. You can actually build assisted living, okay? You can build assisted living communities with some real estate investment friends like us, right? Or our friends on the network, okay? So hopefully you get an idea. Now, I'm gonna just jump to this infographics. Every week, we actually create a infographics, give you the high level numbers and the directions and trends. Basically, this is something for you to just pop into your phone. And then whenever you need to talk to an investor, lender, or buyer, or somebody, or just to get yourself familiar with what the current market is, it's actually fresh and up to date. You can just basically pop this up on your phone, right? We actually have this. It takes a lot of groundwork and behind the screen number crunchings in order to put this together, right? So, for instance, if you care about San Antonio, so basically we got all San Antonio's data here. It's the number one buyer's market, all right? It's number one. We keep saying that for almost 6 months now, and hopefully somebody is paying attention to that. We keep telling people that Austin is a dying market, is a dead market, is oversupplied, and if you want to do a buy and hold long-term rental, you are in the wrong business. You're going to lose a lot of money, right? But if you want to get into the mid-range, say $300,000 properties, fix and flip, that might be a good chance, like what Steve said earlier, right? So deal participation and find those off-market deals is extremely important. Yes, some of the people still count on their real estate agent to look up, MLS. It's okay. I mean, it's up to you, but really, you can't find great deals. Otherwise, you know what? Those are real estate agents that would do the deals themselves. But do you know more than 60% of the real estate agents are not making any money this year so far? Do you believe me? Do you believe me? Oh, well, Steven and I were in the real estate, so we hear all these complaints all the time. So you don't hear the champagne pops, okay? You just hear them quitting, right? They all try to find a second job or do something differently to make some money, right? Make the ends meet. And I feel bad for them because they should learn, mortgage learnings and or getting, some financial educations. But anyway, all right. Sorry for the distraction. Let's pivot back. All right. So if you're interested in another thing that Steve had talked about last week, and we have been talking about it for 2 weeks, is that we have a great handy dandy tool just created. In a second, I'm going to do a demonstration to show you how that works. However, that's not my focus for today. You can scan the barcode to join the alpha test and probably win a lifetime license. What I mean is you're going to have all the leads, all the deals of a pre-foreclosure and other, distressed owners, distressed properties on your fingertip, literally. You can pop it up on your Tesla screen. You can just follow the directions on it, and you can pop it up on your phone when you walk down the street or neighborhood to identify those distressed properties and knock on the door. Okay, we make it extremely handy dandy so you can use it whenever you're on vacation or somewhere. Okay, so scan a barcode and you can get access to it. Now let's talk about this week's major economic reports and the numbers. So Monday was a dramatic day, as some of you know. It has a huge up and downs, and it created a lot of a panic, right, in the market. Actually, it was a good news that when President Trump are not going to attack their major power generators, which is kind of a little bit of winding down of the war, right? Because we're in the war for 20 some days now, right? Almost 20 some days. Yeah. So that was good news. So the market went up dramatically, right? However, lately the market still got affected, being corrected, because that was just a excitement, up. But then if you look at a Tuesday, right, we're talking about the U.S. productivity number. It was falling into the estimation and the forecast, but it is down. So basically, U.S. productivity went down from 2.8% to 1.8%. What does that mean? Productivity means output. Output means revenue, means GDP. So when the productivity goes down, it indicates that either we don't want to build, or we're spending a lot of money not producing anything, or we're producing things very slowly to catch up with the consumers or the industry. So that's not a good news. Okay, that's a bad news, pretty bad news. And then they're also talking about the PMIs, the manufacturing index, pricing of a manufacturing, right? The price is actually coming down. So is that good news? That's actually not bad news. However, the overall manufacturing PMI is actually going up. So remember, the productivity is going down, and the manufacturing PMI, the price index, is going up. What does that mean? That means the U.S. is losing money in producing goods. Then it will affect our exportation, affect our GDP. Okay, it's getting more expensive to build things, so people don't want to build. That's how you connect the dots together. All right. So Tuesday is pretty bad to stock market and to everybody's expectation. All right, you with me so far? Okay. And then Wednesday, which was yesterday, the import price index. Look at this number. It's a 1.3 versus the forecast of 0.7%. Is that good news? No, it's a bad news. It's horrible news. Okay, it's a horrible news. That means that we're importing a lot, and we're consumers and the U.S. citizens, we're paying a lot for the goods that we import from other countries. Okay, and other than fuel, yes, we said the war is creating a lot of a panic over the fuel, gas, and the diesels and all that. The price is going up. Instead of a $2, we're paying 3.69 for a gallon, and average regular gas, right? I mean, if you're driving a Dodge, 1500, too bad for you. You're paying probably $5 every day just to drive around, right? No, the second number actually announced yesterday was that all the import price minus the fuel. Okay, what does it mean? We import goods like clothing, manufacturing materials, and some of the day-to-day, consumer materials like clinics and then computers, all that. It's still going up pretty dramatically. Okay, if you look at the number, it's a 1.1 versus 0.8% previous time. So these two numbers are adding a lot of pressure to the U.S. stock market. Okay, that's why the stock market was excited on Monday, and then you got to shake it up and dropping like a rock. And then this morning, though, they talking about initial jobless claim. So people are losing job or getting laid off, or because of AI, all that stuff. So they anticipated, forecasted about 210,000 layoffs, and then the new jobless, right? Previously it was barely a little bit above 200,000, but it's going up. So is that good news? Nope, it's not good news. Okay, so all these are affecting the stock market, and all through today there are a bunch of talks, right? Federal Reserve talk, talk. A lot of time these people don't know what they're talking about. Okay, because they want their job safeties, so they talk about things that is irrelevant to U.S. market and consumers like you and me, or investors like you and me. Okay, And then tomorrow, Friday, they're going to keep talking, right? But be careful. Philadelphia Fed president, they specifically talk about manufacturing. Okay, be careful with that. So, do I have a forecast for tomorrow and today? You know, my anticipation is tomorrow the market is going to drop. Okay, is going to drop, and there will be mixed information about, war because of the consumer sentiments and all that. Because the March, basically the March consumer sentiments is going to be announced tomorrow. We anticipated, right? The forecast is that going down, right? It looks like because of the gas and the war and all that, is going to go down a little bit more. Just so you know, though, last couple of days also the Federal Reserve had an announcement about the interest rate, right? In a second, we're going to talk about it, and then the interest rate really affect you and me, especially on mortgage. As Steve says, that I am going to talk a little bit about a mortgage. What's the scoop over there? And we had some deals, and the deals went through, but lending is a big hurdle, and I'm going to share that if we got plenty of time. Okay, if we got enough time. But anyway, let's continue. So let's look at the market performances as we just look at whatever the announcement, the numbers, whatever. As you can see, it was dropping. Yeah, the whole last 5 days, we got a excitement pop up on 23rd, right, which is Monday, and then Tuesday it just going down, and then Wednesday got a little bit of mixed message, but in general it's going down. The dark blue is basically S&P 500. NASDAQ is also not so excited, right? Because the most recent announcement of Meta, which is Facebook, they just let go about 700 people, right? They basically claimed that this kind of a third space, the what they call that, realistic space is a failure. So they put in 100,000. They put about $1 billion in there, almost $1 billion, and it's all wasted, right? So they're letting go 700 people. It's an indication of not doing well. And we're also talking about a Russell 2000. Russell 2000 is actually going up a little bit, which is a good thing. Yeah. But VIX, if you like the VIX, VIX is a volatility. Okay, so for those who does stock trading, all that, you definitely need to pay attention to VIX and also the zebra edge. Okay, there are two parameters, so you definitely want to look up instead of just S&P 500. Okay, so on the right side, we're looking at a year of today. Year two today. Is the stock market doing well? Not really. Actually, it's a negative. Do you know that? Yeah, it went up significantly. Gold, silver, everything was exciting, but it's all corrected now. So if your money in there and you didn't move or trade in and out, you're pretty much back to zero. Okay, so sum total zero game. Why is that so? So look at this orange line here, the orange line, the dark orange line. It was a positive until kind of at the beginning of the March, and then it start going negative below zero. I told you before, this is called a zebra edge. This curve is a strong indicator about stock investors or trading investors excitement. Okay, when the excitement is a positive, the market or usually will long term go up. Right, long term could be a quarter, could be a 6 month period of time, but right now it's going negative. It's going negative. Okay, so you got to be careful, right? If you buy options and do margins, you probably want to watch out for 3 months ahead of a time. Okay, be careful. And the VIX, as I said, volatility. Look at the volatility. Oh boy, is going skyrocketing. Right, is even higher than the SpaceX shadows. It's 80%, 100%, right? That's what we're talking about, the volatility. So although I'm not going to talk about, I have all the licenses, so I can talk about it, but of course not in seminars. All right, that's just not good. But let me say one thing. When volatility is there, if you are doing stock, you probably panic. If you do option, you probably get excited. However, there is a similar investment strategy, which is only going up, never go down, never go down. Okay, when market go down, they go flat, and anytime there is a volatility, your money go up. So if I draw the line overlay over this purple line, which is the VIX, so that means when it goes up, it will stay there. When it go down, it stay there. But it went up, it goes up too. And if the market drops, you actually go flat. And then when go up, and you go up again. That is what we call the indexed strategy. Okay, indexed strategy. Again, a lot of the terms I'm throwing out at you, you probably have no idea whatsoever. But just trust me, okay? If you never heard of it, you should have. All right. You never heard of it and you never get educated, it's your fault. It's not my fault. Okay. I'm tossing the term because I'm in the real estate investment and financial investment as well. And I actually did investment banking in my previous job or life. And I do private equity too. So, but anyway, so you got to look for indexed strategy, indexed investment strategy. I'm not talking about ETF. Okay. ETF is, you know, exchange traded, funds, and they do index the funds, right? Index funds. No, that's not what I'm talking about, right? But anyway, if you're interested to scan a barcode and then get hold of me or Steve, we can explain a little bit, or we can find someone who has time or investment advisor to talk to you without a fee. Okay, next week is going to be quiet on Monday. Remember, this week, Friday, it looks like it's going to drop again. Okay, and on Monday is going to go flat, and Tuesday there are a lot of the home price index will be announced, and the business barometer will be announced. So Chicago usually is talking about manufacturing as well, industry as well. Okay, and they're going to talk about the consumer confidence. So Tuesday, it's tricky. That's why they didn't give out the forecast numbers. Okay, because if the actual numbers beat the forecast, the market will go up. Otherwise, it's going to go down. So right now, we don't know. We don't know. Consumer confidence in a second. I'm going to show you the chart is actually not a positive, and the business barometer is mixed message and is not really positive. And the home price is actually dropping, which is crazy. Dropping. You think people will be excited? They probably get really upset. They want to see the price go up, right? They think the price go up is always a good thing. No, not really. So Tuesday, there's a possibility the market will go flat or even go down further. Okay, and then Wednesday they're going to talk about retail sales. Talking about pretty much about retails and the business inventories, all that, and the manufacturing again. Remember what I said? Manufacturing is not doing well. Okay, so it may push the market down again. And it will create, if we do see the market flat on Monday or even a little bit lower on Monday, Tuesday, and Wednesday, it will create a dramatic panic. Okay? It will create a dramatic panic. This is what people keep warning about us, right? So what my suggestion to you would be, hold on to your cash. Okay? Don't jump in. If Tuesday is dropping and you dump all the money in, you may regret. Okay? Watch it. And if you really want to invest, consider short-term options. That is safer and keep the bulk of your principals safe. And then Thursday is going to announce a jobless claim again. Again, though, U.S. trade deficit is not pretty. It's not pretty, I'm telling you. So all these can send the market keep down for the next week. And then U.S. employment report is actually supposed to be positive. Okay, so that is next Friday. So we may see a short, kind of a excitement on Friday. Okay, the Friday actually go up a little bit. You know why it's going to go up a little bit? Do you know? Because it's the end of a month as well, and we're close to Easter. All right. Usually before any holiday, if you have been in our webinars before, I always warn you that before any holiday, usually there is a last minute rush. People wants to get something, right? Before they take on vacation or something. So usually that happens. And guess what? Next week we have Good Friday, and we have Easter Sunday, God's resurrection, right? Jesus' resurrection. So there might be some the speculations that they should put that order in. All right. If that's the case, then we're gonna have a little bit of excitement on Friday. But overall, next week is not really exciting per se, unless there is some major announcement, like layoffs, like the war stops, right? A negotiation path through. Okay, cool. So that's the overall market. If you got a question, take it offline or put in the chat. Now let's keep looking. Commodities. These on the left side were the last time we're talking about. Sorry, last week I was sick. I couldn't, and I was busy too. I couldn't talk. But if you look at this, everything is turning. At that time it was this was beginning of March. It was red. Red means price dropping, like oils and all that. But since the war starts, everything turns green. Green means what? Expensive, go up, price go up. Okay. Right now, oil, raw oil, is over $100 a barrel. Okay. And gasoline, I just drove I drive Tesla, right? And we charge for free, and I put my truck in the garage. I don't drive it because it only gives me about 18 miles per gallon, and I have to pump like premium gas, right? So I put in the garage. I only drive Tesla, and I just drove a gas station. It's a 3.69 per gallon. Okay, that's crazy. That's crazy, right? So think about how many people are driving for a living, to go to work and come back home, right? This is really costing a lot on their life. So the consumer excitement is going down. They're gonna complain, and they're gonna, yeah. So the oils are still going up, and just this couple of days, if you add these numbers together, weekly, the oil price went up over 4%, 5%, 6%, 10%. Okay. Monthly is 30%, 40%, 60%, and 70%. You get what I'm saying? And the gas as well. It's crazy. It's totally crazy. Okay. So if this war prolongs for another week, I'm telling you, I would buy Tesla stock again. Okay. Because the electric cars is going to get really, really popular again. Because electricity doesn't go up that much yet, right? And a lot of people can get a free electrical charge somewhere at a hotel or at work or somewhere. All right. So if you don't notice, a lot of Teslas are running around on the street because of the gas. Okay. And the price of a Tesla cars or electric cars probably will go up too. Okay. And yeah, I'm not asking you to do something. I'm just saying, watch out. Now, noble metals, gold and silver. Yes, it comes down a little bit, but it's going to continue to make adjustment. Gold, AU, and silver, AG, right? These are, they play against US dollar. What is the US dollar played against? It's oil. Okay, it's oil. Okay, so when the oil price is going up, US dollar is actually going up. It's going strong. Okay, when US dollar is going strong, gold and silver is getting dumped. Basically, it's cheap. And when US dollar is strong, the other parameter we look at is actually the treasury yields, the US bonds, right? Especially if you got my training before, you got to look at the tips. Okay, the 10-year tips and 30-year tips and all the tips. There are the indicators of the lendings, right? So right now the yield is going up, okay, going up quite a bit since March, quite a bit, from a 4.6 all the way to 4. Almost 5% already. We're already past the 5. What does it mean? Why buy gold, right? You want to keep your money safe. But if you can buy US bond for 30 years and it guarantees about 5% yield every year, why would you worry, right? Why would you worry? So that's why a lot of institutions and not individual but institution will buy gold. Buy bond instead of a gold. However, watch out, silver is different story. Okay, silver is different story, and also partially gold has a different story as well. I told you before, we make IC chips, especially AI chips. Okay, it requires a lot of a silver and a gold. Yes, how do I know that? My then life, I was a PhD student in in semiconductor. Yeah, and I wrote a paper and published books about those before. So ACs and the ICs and the ACs and all these AIs are going to cost a lot of silver and gold to manufacture. Do you know that Intel and AMD just increased the price by 15%? Did you know that? All right. So yes, we're saying the GPU from NVIDIA is everything, but that's not true. You still need Intel, you still need AMD chips to run things like Tesla cars. I just talked about Tesla car, right? Tesla car actually use AMD chip, all right, processor, main processor, a CPU. And when the AMD price is going up, what's going to happen to the Tesla car? It's going to go expensive. Computers is going to go expensive. Cell phones and all electronics are going to go expensive. And also the gold and the silver are getting more expensive. And especially when building missile and weapons, silver is much needed. Okay, just watch out. Silver is going to continue to grow. All right. Okay. All right. Let's relax a little bit talking about the mortgage. Yes, Steve was right. The mortgage already came up. It was dropped to almost 5 point something. And then now look at these numbers. 6.22, 6.11. That's the mortgage for 30 years, right? 15 years, yeah, you may get like 5 point something, but you really have to have 800 and above credit score. You have to have a solid income, cash flow, right? They check everything. They check your life insurance. They check your retirement plan. They check everything to make sure you can afford the loan, okay, the mortgage loans. And I'm feeling really sorry for the loan officers. They're quitting like falling leaves as well, because to make a loan happen, they have to work extra effort. And we have some deals that we put in, 1/3 of the total cost of the house, right? The house price is not going to work. So we put in half of the house price to secure the other half of the loan, okay? And it went through. I'm just saying the mortgage borrowing process is such a hassle. It's extremely difficult. Okay, so building permits is going up, which is not good news for the builders, but it's good for the consumers and investors. And the building permits for overall residentials is going down. Okay, and the house stars, unfortunately, is problems with a lot of a house being built right now, and the price over there in that market is going to continue to drop. Okay, the mortgage origination is going up, but they don't get through. Okay, trust me, they're not going through. And home sales is pathetic, as we said. especially the existing home sales is really not good. And actually, the new home sales is better, a little bit more, because they can offer builders mortgage, okay, sponsorship. Okay, and then now let's look at consumer confidence is picking up a little bit in February, but because of the war, it's going to go down. Okay, that will drive the market down. And a lot of the indicators already says very clearly that people are worried. The currency is not strong. Stock market is volatile, even though it's still going up. GDP is not doing well, right? Unemployment rate is actually going up a little bit now. That drives all the consumer confidence. You know what I'm saying? But let's look at the layoffs. As I said, Facebook just laid off 700 people. Some of the gaming companies are laying off about 1,000 people, called Epic Games. If you know, that's one of the major game companies in the world. And they're laying off 1,000 people. That's a lot of people. Look at the columns of the percentage, right? There are some finance companies. Look at how many finance companies are letting go people. Crypto companies, finance companies, data companies, right? And a security company, finance company. Finance, so banking, insurance company, and then what else? I forgot. Mortgage companies, they're letting go people, okay? Because AI are driving this kind of a desire from the stock investors that the more they lay off people to replace people with AI, the more promising it is. Look at a Block. The company laid off 4,000 people, right, as of February. So as I said, some of the companies, these finance companies, are letting go like 30%, 40% of their people. Okay, that's something. If you work in the industry, I'm sorry, man, you got to watch out and look for the new jobs. And probably real estate is where you should stay. But anyway, as I said, we have a special report on mortgage, and I don't think I have time to report it and to read it through. However, I do want to bring to your attention that we have a newsletter. It's already fresh in the market and out of a print, ready to go. And there's a PowerPoint version that you can use to present it to your partners, and we have very storytelling information that you can use. And we also have the number version, which is the report version of our newsletter. If you would scan a barcode, we are happy to share that with you all. Okay. And also, let me not forget to remind you that before the deadline of the tax return, which is in about 2 weeks now, 3 weeks now, there are some of the deals, promotion deals for self-made pension, self-made IRA, individual retirement plan, or roll over your existing 401ks, SEP RAs, all that is still there. Okay, before it's gone, you really should take advantage of it. One of the companies give you 50% bonus right off the back, right? And they give you 200% interest bonus as well. So if the market moves 3%, you get 6%. If the market moves 5%, you get 10%. That's awesome, right? And the other company, and by the way, this money never go down, only go up. There's no fee whatsoever. Another company has a little fee. However, they give you 30% bonus up in the front. And what I like the most of this company's offer is they give you 9.5% guaranteed compound interest every year for about 15 years. How do you earn that? I don't know. I know most of the people doing stocks, day tradings, they don't make 9.5%. Okay, they're happy with 6% or whatever. So and for long-term rental home is about 4 to 5%, right? And right now, because of the pricing and tax and everything, insurance, they can barely make a 4% of a return, right? So if you can get 9.5%, you probably don't want to put your money into long-term rentals. You probably want to put it into this market. I personally did that, right? because I'm a business owner. So I can create my own SEP RA by putting 25% of my revenue into a SEP RA and tax deductible. Okay, completely tax deductible, right? And I get 30% of that money, and then I get a guarantee of 9.5% compound interest for the next 15 years. Not bad deal. Not bad deal. All right, and if you're, yeah, like I said, reach out to us. Okay. Our end of a quarter promotion is still going on with the data, data subscriptions. But if you have heard about our latest promotion of the deal, the deals near me, that alpha test, oh man, you should really get in, because you're gonna be able to see the deals near you. Like, this is an example. This is the real website. You go in there. If you in Austin area, you can see all the deals. Let's zoom in, right? You can see all the deals. These are the pre-foreclosures. Look at all these pre-foreclosures, right? If you're interested in some, let's just say in your neighborhood, let's pick a place that you're familiar with. Let's say right by the lake area. This is a hot area, right? Most of the houses are $2 million, $3 million. Well, there are pre-foreclosures. So if you're interested and the nearby, okay, you click this one. It says that it's already auctioned, but still you can look at the detail, right? And you can find out how much is the property is worth, and the details of the properties, and what is the interest rate that we're currently on the mortgage. So you can consider like a sub 2 or owner's finance, right? And assess values. And we actually provide all this information to you. Like this pre-foreclosure, right? It only has about 2% equities. You know what? They really are distressed. You can easily get this deal, right? And we also show you what strategy you can use: fix and flip, or buy and hold, or Airbnbs, or whatever deals. And we got all the formulas there. Again, at this point, we accept alpha testers, and in the future is a subscription based or token based, and we have a 6,000 data points around the metro areas in Texas area, right? That you can leverage. Okay. With that said, if you're interested, scan a barcode, and we can get you onto the test run, alpha test. Okay. Hopefully you find some deals, then we all make money together, right? Okay. With that said, Steve, I think that's all I have for today. I mean, a little bit of delay because of the technical difficulty, but I think you probably got something good for the rest of the day, right? And I have the presentation about the mortgage, and like what I said, the mortgage is really hard to get right now, right? And this is a full report of what's going on with the mortgage industry, and a mortgage that you need to consider. Real Estate IQ, we actually provide lending service. We bridge you with the lenders, and we have some authentic lenders that you can get a really good rates. And we stand by them, and we want you to get your deals done. Right, Steve?
Thank you, John. It looks like,
right.
I don't know if you were trying to
Yes,
show
that's
us
it.
the
Uh-huh.
I don't know if you're trying to show us the app earlier.
The app, yes, I was going to show the app. I did. It didn't work.
Yeah, we only saw the kind of promotion screen. That's okay.
That's so funny. The screen. Yeah, I meant to share the entire screen.
Well, anybody
Oh,
that's
boy.
interested, you can go ahead and
Yeah, here's the deal.
send us a message. Oh, there you go.
Yeah, this is the deal near me. And if you're in DFW, well, let's say you're in Houston, you go to Houston area, there are tons of pre-foreclosure information that is available. I mean, the deals, real deals, by the way. You can click into the detail, It depends on where you are. And you basically can pop them onto your navigation tool software. You can just drive them through. I actually pop it up on my Tesla screen, and basically I see all of them pop up, right? And then I can just go stop by the neighborhood and knock on the door and then see what's going on there, or check out the property.
Yeah, you know
Like
what
when
I
you
like
click into
about
the
it.
detail, yeah, we
What
have
I
an
like about
algorithm.
it is
Yeah,
you can see, the ones that are upcoming, right, going into the auction. There's also
absolutely.
those that have already passed, but you can kind of see the progress
Yeah,
of the deals too.
absolutely.
So it's
And we
very
have an
interesting.
algorithm to do the deal calculations. The coachings that Steve give and I give, right, populated for you, right? You can see them. And we have the entire auction schedules available for you. If you on vacation on, let's say, tomorrow, you can just click 27th tomorrow to see all the auctions that is available, right? Analytics too. What is the overall proof of closure business? Medium equities, what should you look for, right? We coach people to look for low equity distressed properties, right? That give you a lot of leverage, right? And then if you, and we got a trend charts and all that, right? We also got a community. If you got a deals you want to pop in and then you want to do wholesale and the deal and people to have a discussion with you. We only have very limited like alpha testers, so we're not going to do that. But the pipeline is when you really identify those deals, you put into the deals. You can literally use our CRM to do the deal trackings and the deal management. Send out notice. And one of the features pretty soon is that we have all these deals, right? We have all these deals. It's in Florida, in Texas, and in other states. But it's a shared deals basically. Can I block these deals for myself for 5 days? Yes, you can. And we will charge you a small little fee in the future, right? So you can block these pre-foreclosure deals. Nobody can see them on the map anymore, right? So as I said, we're a lot of features, and we're getting recommendations for people like you on how to enhance this tool. And we really want to build this tool with you, for you, and by you, right? And this is a flexibility of doing everything in-house and leveraging AI, right? We are AI powered real estate investment data intelligence company, and happy to do business with you. Okay. All right.
Thank you. All right. Okay, let me just share some upcoming events and then we'll end this session. So as you can see on the screen here, we have a couple of classes coming up. It's on the left. And then tomorrow, don't miss our office hours. If you got deals or you want to learn in-depth questions, that's where you go. And then you can also, we want to invite you all to join the open house where you can learn about real estate IQ, where we position ourselves and how you can participate. All right, that's all we got for today. And thank you, everybody. You can scan the QR code if you want to connect with us. And have a great rest of the week. See ya.
That's right. Have a good day. God bless everyone.
I'm kind of pitching myself here as somebody who's an experienced investor, but always, I'm definitely new to this business as well. I just want to speak about this product and just how much, it has really helped me, propel myself, get better with talking with sellers, actually be able to close a deal. My strategies right now have been primarily direct mail, cold calling, and cold texting. And I've found a lot of success with Real Estate IQ, especially being able to get in front of customers, have engaging conversations. And of course, I'm hoping to use all of that to build my own business and eventually retire off.
Excited to be here, and I want to say a big thank you to Real Estate IQ. They have the absolute top leads in the industry and just make investing effortless for all of us as real estate investors here in Texas and obviously everywhere else that they're focused. And I'm proud to be associated with Real Estate IQ. Love what you guys do and love how you all help investors so that we can focus on the thing that makes us the most money, which is the job of real estate investing.
I wanted to jump on this morning and give a shout out to Real Estate IQ. I began my journey with them a few years ago, just using some of the more basic products, the off-market leads. And since then, growing and visiting and talking with not only Steve, but other people who are involved with Real Estate IQ, I've had the opportunity to actually not only be a client, but I also became an investor with them. And that is one of the beauties of being able to be part of Real Estate IQ, is it gives you the opportunity to grow as an investor, especially in real estate.